Hello and welcome to Compounding Curiosity. I'm your host Kalani Scarrett, and this podcast is all about compounding your curiosity alongside my own through thoughtful interviews with interesting guests. For transcripts and detailed show notes, check out the links in the description. Hopefully you're as keen as me to learn something new, so let's get stuck in. My guest today is Shiv Sharma. Shiv is based in Singapore and is the head of international at Stocktwits. He's previously worked a range of finance and investing roles, including those in investment banking, private equity, and venture capital. In this conversation, we cover the future of investing, the communities behind it, and opportunities for Indian retail investors. I hope you enjoy my conversation with Shiv Sharma. So Shiv, thanks for being here today. I think a good place to start might be in your background, as I know you've done a range of finance and investing roles. So I'd love to hear about your whole journey and how you ended up to where you are today.
Yeah, sure. Thanks, Kalani. Super excited to be on your podcast. I think you're doing a great job here. So I look forward to it. So I started my career off in investment banking in New York. Started off at RBC Capital Markets in the tech group. Didn't actually want to be in tech. I actually wanted to be in energy and manufacturing and old boring industries, but somehow got lucky. And I think that was probably the biggest break that I actually got in my career was actually ending up in the tech group. Had a standard experience there of a couple of years where, worked my butt off 100 hours a week and did M&A and IPOs and things like that. But I hated investment banking. So I wanted to move to private equity, and I moved to a PE firm for a couple of years. And then from there, I really wanted to move to Asia. So I went to INSEAD in Singapore. From there, I actually didn't get a job in Asia. I worked super hard to try and make it happen. Was super bullish on the entire Asian Indian growth story, and wanted to be a part of it. But ended up in London for the summer, but then interning at Fidelity, investing in Chinese internet stocks. Had a great experience, but it wasn't really a good fit for me back then, and kind of wanted to go back to the private side and be a bit closer to companies and a bit more hands-on. And so I moved to Cisco's VC and M&A team in San Francisco, in Silicon Valley, where I was investing in software and collaboration companies. Spent a couple of years there, about 3 years there, built a great network, had a phenomenal experience, got to invest in some, really high growth, well-known companies. And then from there, my wife and I really wanted to move to Singapore. So, coming from a software IT background, when I moved to AWS, where I did a few BD and strategy roles in Singapore for the APAC, but for the APAC region, had a good experience, but it really wasn't what I wanted to do with my career. And so then ended up at Stocktwits. Been here for about 7, 8, 9 months. It's been awesome. It's like my day job and my passion combined into one. So it's pretty intense.
So you mentioned at Fidelity that maybe it wasn't a good fit for you. Then if I'm allowed to ask, maybe why not? Or why do you think public equities and Fidelity wasn't a good fit at the time?
Yeah, sure. So, so when I was at Fidelity, it was pretty ironic because I love stocks now. But in those days, I wasn't as deep into the equity markets. I think, there was a lot there. I guess back in those days, the mutual fund industry was going through its pressure. And you could see a trend going towards ETFs and, lower AUMs and fee pressure happening in the industry, right? So I think I probably would have preferred to be at a more growth-oriented hedge fund back in those days. And then second, I just wanted to be closer to companies. So I wanted to be a lot deeper in a sector where and then also be a lot more close to management teams and, how businesses grow and be more exposed to how, business decisions are made.
The difference between late stage growth and public investing, what do you think are the biggest differences?
But the main difference between, I think, late stage growth investing to public and VC is just the focus on product. I just think you really need to be quite, kind of change your mindset to really caring about product, because the product roadmap and the product decisions you make actually reflect in the numbers in the future, right? So for example, when you go meet a CEO of a Series A company or Series B company, the conversation is mostly around product. And it's not going to be around numbers and P&L and stuff like that immediately up front. And so I think that's the biggest change from later stage growth investing. Also, I'd say, I think what I learned about, from the VC world for a few years is kind of, I built a few mental frameworks that have stuck with me that I still use, even now in public equities, right? And I think one of those is around what you have to believe. And so that, I guess, is, if you were to build a but a longer term financial model, and you were to kind of think about, what it takes for this business to hit 100 million of revenue, for example, right? So, but there's certainly, inflection points along the way where, so for example, I guess one thing I guess that really stuck with me is helping to build a framework to think through what specifically you're underwriting when you do a deal. So if you were to see company XYZ get to 100 million of revenue, what changes have to happen externally in the market or to the product itself or to the go-to-market itself? For example, if you have a SaaS company who is currently selling to the e-commerce SMB market, but they want to shift. But in order to get to 100 million of revenue, they have to become a more enterprise vendor. And that's a huge shift that I guess, which impacts your product, which then impacts your overall go-to-market motion as well. So that's an example right there of kind of, breaking down what has to happen. One more example, just to kind of apply to public markets is around Roku, right? So that's a stock they own right now where, for example, right now we're going through an overall shift from, ad dollars from linear TV to OTT, right? So if that were to happen, then, what steps have to occur from the ad spender side to unlock more and more budgets and having those convert to OTT. But small things like that are all product driven that are mainly around, the buying motion and, how budgets and kind of how revenue is earned.
If we fast forward to today, what areas are you looking at for growth and opportunities in public market investing?
I guess from my portfolio perspective, I think it's still the same old. I think it's still the same cloud, software, fintech. And then also kind of been, doing a bit of some large cap stuff. I think there is some value in the large cap names where they're not as, overpriced. And I think there's some cyclical elements to ad spend. And I think the large cap names have been discounted because of regulation and, like large companies do get kind of less expensive as they get larger over time. Historically, that's always happened. That likely always will happen. But I think like these platforms can probably continue to get larger and there's optionality as far as spin outs and, kind of divestitures and things like that in the large cap world, right? I guess one thing there on, the usual e-commerce software fintech names is that they are kind of getting expensive, and, I think people now totally get that there is, a lot of value here. I think large mutual funds and all are now kind of owning these and kind of heavy scale and heavy depth now, right? And so I think the easy money's already been made there. And I think there is a lot of, valuation risk, right? In terms of, with interest rates and the like, right? Because, as you see rates go up, you'll likely see kind of nasty pullbacks in growth stocks. So that is something that I'm kind of really cognizant about and kind of really worried about personally, because I do have a heavy exposure to growth stocks. And so that's one area I'd say. And then, otherwise, what I do from my own personal perspective is that if there's areas where I don't really have an edge or don't really know much, right? So things like, for example, I guess gaming and AR, VR are trends. And then also electric vehicles are trends that, everyone on FinTwit and, everyone is kind of really super excited about, right? And they're not really, I guess, not known things at this point, right? So I think in those areas, what I typically do is just kind of use ETFs and use people who know that sector really well, just because I don't have time to do deep dives and even the interest, right, to understand these kind of micro trends and the depth you need to invest significant amounts of money.
So I think it's probably fair to say that valuations have been on the higher side of fair lately, but how do you view the macro environment and the valuation risk going forward, which you mentioned just previously? Like, how do you manage risk and volatility in your portfolio and how do you approach it?
Yeah, exactly. So that's a great point. So I'm not a macro guy first, right? So that's the first thing. But I think you don't have to be a macro guy to know that you will see valuations come down as interest rates go up. Now, if you believe the whole Cathie Wood thesis around general trend towards, lower interest rates and lower inflation environments driven by high productivity, I kind of do ascribe to that to an extent, but I'm not a macro guy. So I'm really not the right person to address that. But I will kind of continue to follow along with the guys I trust, in FinTwit and Stocktwits and kind of the overall, investing world to get a feel for it. But how I do but diversify is that, within tech, you do have quite a few buckets that are, non-all related, that are non-purely all, in the same, work from home bucket, for example, right? Because they all have different forms of revenue. So for example, I own a lot of, the more ad revenue businesses, right? And so those are highly cyclical. As travel comes back and growth comes back, they do get a greater chunk of ad spend again, right? Then also, people don't realize that even software is not all the same. Even in the SaaS world, while you do see kind of high multiples, you do see also buckets of software where the original, or I guess where the end market is not necessarily a focus area in kind of low growth environments. So for example, Smartsheet, right? That's an example of a collaboration productivity software vendor who is a really hot IPO, who's done really well, who was growing in the 40-50% range back, before COVID. And then during COVID, the demand for the product literally went to zero. I actually read a channel check of theirs back in kind of, I think July or June of, COVID, so I guess last year. And I think, but the partners and the channel partners were saying there was almost zero demand as, all the IT budgets and the kind of all the budgets were all going towards, the must have criticality stuff like Zoom and Slack for video and chat, or Microsoft Teams, or even cybersecurity, or even cloud stuff. So that's an example of where, as budgets come back, as work returns to normal, as people are more focused on, the non-critical areas of software and productivity, as people work from more hybrid environments, and, that's where you can see greater demand for, I guess, productivity tools who are not core to working from home, but are actually instead second derivative plays at working from home, right? One more example is HubSpot, where that's, the marketing and kind of CRM world where, now they're seeing an acceleration, but during COVID, when everyone's trying to cut costs, then marketing budgets and sales budgets and things like that are not really an overall priority, right? And so I think people can kind of be diversified within secular trend software and kind of these growth stocks, and that's kind of my plan. But who knows going forward? How things go with valuation in the macro side.
So you've been inside that VC bubble in Silicon Valley, but now being outside of it, what do you think some of the challenges are being outside the bubble and now trying to invest? How are you going about it?
Ever since I kind of left the Silicon Valley world, being highly exposed to, management teams and products and things like that, I kind of, changed my investing style a bit to only focus on the best in breed names that I'm highly comfortable with and plugged into, that have some confidence in, that I can hold through downturns and hold through volatility and things like that. So that's the main change. I think also what's changed since then is that I was focused on software, and, software now is a pretty known trend. I think we all can agree that software is in some way, shape, or form eating the world, as as the famous quote is. And I think we all understand that and see that trend happening. But the next wave of, growth in public markets is probably going to be in, things like gaming and crypto and clean energy and things like that. And so that's where I have almost zero edge, right? So, for me, it's kind of hard to maintain and kind of go outside my bubble and stay relevant in those areas. So I'd say that's the biggest thing. And then I think, how I address that is, now you're seeing the rise of new boutique fintech type of asset managers. I guess whether it's Kathy Wood, who started the trend, who's not boutique at all now, she's very mainstream, but you see firms like Roundhill who are seriously, who are deeply focused on gaming and on sports betting and streaming, for example, right? So they have ETFs where it's easy. So it's easier to buy names like that, for example, but from people who are super focused on this world.
So I'd love to transition more onto the retail investing side. So for retail investors, what do you wish they sort of knew, as in what drove stocks, or what do you think is a key point that they should know?
When it comes to retail, right, like people get really excited about, I think people get really focused on understanding the business really deep, right? And kind of in growth equity, kind of growth stock world, right? So they feel like, if they understand the business really deep, then that kind of protects them a little bit, right? But actually what happens is that at any given point, there's about 2 to 3 different things that really move stocks that investors really care about. And that is usually what drives markets and what drives stock prices for the next, few months to a few years, right? So for example, right, like for Twilio, which is a FinTwit favorite, right? Like for that, it's, how quickly they can move, up the software stack with the segment acquisition, and how they can see their gross margins improve and be not just a a CPaaS technology provider to actually being a software platform that's that's even more sticky and adds even more value and, leads to higher enterprise customer contracts, right? And so things like that versus, yeah, I mean, that's one example. Then also Zoom I guess is one more easy example, right? I think people very often club Zoom in the work from home bucket, right? Which is, for all good. That's probably right? I mean, they are definitely work from home beneficiary. But I think what investors really care about there is how quickly and how big this market can be in adjacent areas, right? So, for example, Zoom Phone is a product that I'm really bullish on that I think now has hit a few million number of seats and enterprises and they're seeing significant traction with, right? So, that's, I think, the next leg of the growth story, right? And plus international. So I think, I think each company has a few different catalysts and metrics and stories and themes, and you kind of need to understand the personality of a stock to figure out, what it's going to do and what the trends may be.
Do you think there's any edges that retail investors aren't taking advantage of or aren't using to their full extent?
Yes, I think everyone has an edge somewhere. They just don't really know it, right? And so, if you're an engineer at Google and DevOps better than anyone else, and the spending habits and how well and how deep you use a product, I think that's really valuable insight, right? But then even if you go walk around the mall and you see the Apple store is really crowded, or if you see your friends all buying Samsungs, right? And these are all super simple, easy examples that kind of people really don't spend enough time thinking about, right? And so I think that's one area. I think also, like the reason people struggle with that, right, is they think like the step going from, knowing Apple is really hot to buying the stock is not really there is more to it from a finance and, stock market psychology perspective, right? So I think that's the step that, the retail investors are kind of now starting to feel more comfortable in. Now, all that is aided by a massive bull market for sure. I think that goes without saying, but I do think the psychology overall of the retail investor is changing.
So you've mentioned already some of the trends that retail investors either should be taking notice of or investing in, but how do you think investors should be finding these trends? Where to look, or how do they find it? What should they be doing? Where should they be going for this? How do you think retail investors are able to find these trends and to get in early or even just take notice of?
I think the good news is that, a lot of this information is available now, right? So you can read transcripts, and just what I would do is when you read transcripts, you don't really need to read the whole thing. You can skim through the whole thing, but in transcripts, the analysts typically ask the questions. Now, some analysts ask really good questions, and some kind of ask the accounting questions and the finance questions for their own models and on their own purposes. But every now and then you'll see a handful of really high quality questions that just squarely hit the nail on the head, right? And I think when I go on FinTwit, one of the things I see is that you see a lot of people who are just explaining the business in paragraphs and paragraphs and paragraphs, and that's actually not that helpful, right? So I think that's probably the best approach is probably the earnings calls where I would get that feel. And also, I think if you study the companies, what they're putting in their investor presentations, so not as much the earnings ones, more of the investor day ones, where every once or twice a year, all public companies will have a big investor day, right? And that's where they'll kind of discuss the growth highlights and, where they see the future of the business going, right? And I think as they start getting into that, you really want to track how that's going to perform. One example here is Cloudflare, right? For the longest time, there was this mismatch on Twitter and, Fastly was just on fire. And I used to own Fastly back then. And, it was just going literally straight up for about 1 year straight during COVID. And Cloudflare, who's a, relatively similar business, right? Broadly speaking, at least. And, they're considered from a Silicon Valley, more of a product centric lens to be a better company and a better product, right? And they also had the optionality on the cybersecurity side of kind of moving into what Zscaler does, right? And they're in super early days of that, right? But I think that's an example of where they talked about it. Now everyone's comparing revenue multiples on Fastly to Cloudflare, but the reality is I think Cloudflare is quicker and more, I guess, is going to hit that next leg of product growth, which is their second new core business area sooner than Fastly will, right? And so that's, I guess, one example where that narrative was wrong and people were chasing fastly. And kind of the reason that happened, right, is a lot to do with, one, retail investors, but two, and I guess more importantly, just the rise overall of, institutions, right? And so Fastly was at that time like a sub $5 billion market cap company, right? And, when they started showing just phenomenal growth from COVID and work from home, you saw institutions who maybe didn't have allocations to it, who were like, oh shit, that's an example of where, getting a sense on Cloudflare of, what they were focused on from a security perspective and how big of a market that is and what that competitive landscape looks like and how big of a business that can be and what gives them the right to be good at cybersecurity from their core business today is kind of the holy grail answer to that question. I think that people want to think about, solve.
So it's probably fair to say that you seem to be quite focused on growth, but what attracts you to public growth stocks? Like what's the appeal, or how do you view it?
Yeah, it's a good question. So it's one where, I think why I love public investing so much, right, is you've kind of de-risked yourself from product market fit. There's going to be product market fit, right? Like, so for example, if they've, raised an A and raised a B and raised a C and raised a D and gone public and, had a nice IPO pop and, seen institutions become interested after the IPO and, more than likely this company's not going to go bankrupt. They may typically underperform, right? But I think that's why why I love stocks so much is that it gives anyone the exposure and the ability to buy and kind of participate in massive secular growth companies, right? Whereas unfortunately, I can't stand this, but it's a truth in the way the world works is that, the VC world is kind of run by the same 10 to 50 or 10 to 20, 10 to 30 VC firms who all get exposure to the best companies over time, right? And so to me, that's just awesome. And I think, like I actually wish these companies went public earlier, right? Instead of waiting to 50, $100 billion market caps to go public.
To touch on what you mentioned at the start of that answer about the dynamic of the top VCs having access to all the best companies early on, do you ever see that dynamic changing, either through companies choosing to go IPO earlier, or do you see there's any way that that's ever going to change?
I hope so, right? I think like, I think you've seen platforms like equities who kind of give retail investors exposure, right? Because, you have maybe employees or VC funds who've been there from really early days who need liquidity, right? So I think that's been a very active way for that to happen. But I think in general, it's quite tough, right? Because, you have too few awesome companies with awesome management teams with so much capital out there, right? And I think until that changes structurally, I think something has to change there for that shift to happen that you're talking about. And the other thing you'll see more is that, over time that, I think to be an entrepreneur, you don't have to necessarily build a massive business. You don't have to try to be a Facebook or a Google or a Snapchat or I don't know, Zendesk or an Elastic, right? So I think people will realize that, there's different businesses that don't have to be as significant or as large, right? Because end of the day, all people really need is a more fun lifestyle that's more flexible and more entrepreneurial and gives you a better alternative than working at a big company, right? I guess the minute you see more entrepreneurs kind of with that philosophy, like you're already seeing it today, right? Where with the creator economy and with Zoom and Shopify, right? You're seeing many brands and many influencers being built and kind of building quite meaningful businesses, right? Who are very lean with maybe one influencer, one business person, and a few kind of graphics and video people, right? And using tools like Canva and Adobe and Zoom and Shopify, right? So I think you may see an investor ecosystem arise focused on that type of area.
And to finish on the retail investing side, where do you see retail investing heading? Like, what are some themes, or what are you looking out for? What are you taking notice of in the retail investing space? I'd just love to hear your thoughts.
Yeah, sure. So I think in retail world, I think you're seeing a general more awareness levels, right? So it's stemming from it's discussed more. So in my social life, right, my WhatsApp groups are very heavily, discussing stocks and crypto, right? So I think the interest level across retail investors have gone way up from platforms like Stocktwits and Twitter and YouTube, right? I think you're seeing tons of information being shared across all different investing styles, right? I think I think investing in stocks and crypto kind of gives people the ability to, express themselves entrepreneurially, where, if they have a super stable, cushy job, at a big tech company or whatever industry they're in, right? I think expressing themselves and the trend they see is something that you're only going to see explode over time. And especially with crypto, right? Where, people don't necessarily have complete exposure to, and access to US stocks that they use and love every day, right? Especially in India, for example. Whereas in crypto, it's completely decentralized, right? One and two, right? It's kind of the same language. It's the same protocol or the same thing across country. And it's great because it's so new. So everyone who maybe missed that whole finance wave of understanding stock markets and valuation and businesses and stuff like that, they can understand crypto, and they're all kind of learning it all at the same time together, right? And that kind of is a very neutral playing field for whether you're in India or whether you're in Africa or whether if you're in the US, right? It's kind of the same type of language and kind of things to study, which is great.
And yeah, I think that transitions perfectly into our next topic. So for community, do you think community plays a big role in investing going forward? Obviously, we've seen recently with Wall Street Bets and FinTwit, but how do you see it playing out, or how are you looking at it going forward?
I mean, yes, for sure, I think, right? So the reason I joined Stocktwits, right, is that I'm personally super bullish on investing education and, this whole retail investor trend that we've been talking about here, right? And I think, there's two different gaps that I think Stocktwits and kind of, that I see being filled, right? One is community and one is content, right? So I think what you're going to see is that, people don't learn by watching really boring videos on finance, and like understanding valuation accounting and heavy finance topics. You don't have time, you're bored. You people have day jobs and busy personal lives and social lives and work lives and family lives. Like no one really cares about understanding these academic concepts. But you don't get extra credit, I guess, for actually knowing more about a company than Warren Buffett, for example, right? Or some top VC firm. It's the same returns you get either way, right? So I think like we've been kind of lucky to see FinTwit and kind of Stocktwits and FinTwit together kind of really explode over the past few years. And you're seeing some even well-known professional money managers to, ex-pro money managers to just really smart retail investors kind of being quite active and building kind of pretty active mini sub-communities, whether it's Substack, whether it's a Stocktwits premium room, and like whatever it may be, right? And I think where it's going to go is that people will likely have money in mutual funds or in ETFs or whatever it may be. People will also probably follow influencers who are experts in certain areas, whether it be crypto, whether it be penny stocks or growth stocks or tech stocks or software or space or electric vehicles, whatever it may be, because it is hard to kind of maintain an edge in all different areas, right? And so and you have experts now on FinTwit who kind of focus on certain, areas within that. And so I think people will be willing to pay for insights in kind of sub communities as well as broader communities. I guess to gain these insights. One, right? And then two, I think content is something that, really is lagging behind. I think we all know and love CNBC. I think we all know the failures and the pros. I think it does get a bad rap for sometimes good reason, sometimes not so good reason. But overall, I think, there is opportunity, I guess, to create a lot more curated, a lot more specific content on kind of investing in general, whether it be NFTs to art, to sneakers, to tech stocks, right? So I think that's kind of the gap I see Stocktwits really filling in the near term, and I'm super excited about.
Do you see any difference between being anonymous or being openly public in these communities going forward? Like, what are your views on that? Just curious.
Yeah, it's a good question. So I think, I guess one reason why I'm so bullish on this trend of community, right, is you're seeing tier one hedge fund professionals be on Twitter and Stocktwits. And that to me, I think is incredible, right? So I think, and they're often doing it, behind anonymous names, to your point. I think in order to be someone who's going to have a community and have trust, I think you're going to have to kind of go and like be more honest and be more upfront. And like you probably can't hide behind a fake name if you want to build a super large community, right? As influencers become more mainstream and as you start seeing them hit scale where they have to be covered on CNBC, for example, right? I think at some point you're going to see that change, but we're in super, super early days of that trend happening.
And lastly, on the topic of community, before we get stuck into Stocktwits, are there any aspects of the creator economy that you're excited about, whether it's the flexibility or the power to the people type aspect of it? What are you most excited about in the creator economy space?
So I think it's that. Like, I think there's people who think that influencers are a bubble, right? Now, like, I'm kind of in a brand scaling mode right now in India, right? And I see the influencer market and, what that's doing and kind of what type of conversion that's getting. I think in general, like, I think people who spend on influencer marketing now, right, have gotten really smart. I think they realize that, um, you know, building brands and kind of, the way you market, right? Like there's a whole process to it, right? So one is, as an influencer, you need to kind of understand your target market. Who is that target market? Who is my target user? What are they like, right? Once you've kind of built that connection with them, you want to kind of build a trust factor with them, right? And once you have that trust, then are you able to, when you do start trying to monetize and you do start trying to market, are you able to actually do it in a way that's, very natural? And I haven't really seen that happen a lot in finance. I've seen it happen a lot in consumer products where maybe you have I don't know, like someone who like a certain makeup, who actually like tried 10 different makeups. She chose a brand that she likes and, she believes in it. I think like that type of story makes more sense than kind of what I'm seeing in finance influencer type world today. Um, that's, I guess that's one answer. Okay. So that's, I guess the creator economy, I think like what I see there, right, is, I think what you're doing now, right, is a great example of that, right? I think second, I think what I'm seeing, right, is people build really small, with what seem like small niches, right? And, for example, in health and wellness, like or in yoga, right? You're seeing quite a few people who, build audiences around clean eating and food and lifestyle and coaching and yoga, right? Kind of all mixed together in one or many different buckets of what I just mentioned. And you're seeing them start to monetize and build brands and businesses on Instagram and on social and via Zoom and Shopify. And I think that is just incredible. Like, I think that trend is here to stay. And I think those markets, like while they're pretty inexpensive ticket sizes, I think those market opportunities are massive over time, right? So I think the other element of the creator economy, right, is I think it's super bullish for retail investing and the trend of equities and crypto and NFTs and art and sneakers, right? I think like as people realize that, like maybe they're not going to work at Apple, Google, Facebook for the next 40 years of their life, right? What they really want to do is end up in the beach opening a bar in Bali, right? And if you do kind of want that, or you do want to have some optionality and flexibility in life, then I think the stock market and crypto world so far in this current global political economic structure that we're kind of living in today is going to be a means to help achieving your goals, right? So I think that's one of the reasons why I'm super bullish on the retail investing trend as well, right?
Yeah, that's a perfect segue into my next topic, which was what was your reasoning for joining Stocktwits?
Yeah, sure. So, for me, I was looking for a career move. I wasn't happy at AWS. I thought from a career perspective, there were enough investors out there, right? So in the VC world, we all know that, VC is now like it's more kind of, the same 20 firms who get all the cool companies who are doing really well. And, I didn't think there's a huge edge in kind of being in that environment, right? And then but then on the public side, I saw that, it's all openly democratized. Anyone can buy any stock at any given point, and people are all kind of using similar or kind of, I guess, I guess in the growth world, they all basically use very similar frameworks. Now, people will argue this, but it's largely true from a high level perspective. And so for me, I thought there was a bigger opportunity, and my passion actually was more around investing education and help trying to find the next set of influencers outside the same 50 who are always on CNBC, for example, right? And so what I found, I guess, in kind of being active on FinTwit and on StockTwit for the past few years is that there's some super smart people who are not necessarily, who have big Twitter followings or who are active on CNBC, for example, right? And so I think there's a huge opportunity to help, uplift the next set of influencers to, create platforms to help them build audiences and monetize, right? And I think so for us, for the chance to be the quote unquote, CNBC for millennials, to be the platform in which the next generation of investors will use to, consume media, I guess, far differently than how our parents' generation has consumed it, or even how we've consumed it now. So if you see what's happening with TikTok and with social media, I think you'll see very modern, very fresh ways of financial media getting more mainstream and a lot more fun to, to digest. Also, I think, where we're going as far as communities, put Stocktwits in a pretty good position, right? So we're seeing, the intersection of social media and investing. I think that is here to stay. I think we all know that's going to happen, right? The question becomes is, how quick does it happen? What are the inflection points? I think GameStop has been a huge thing for that trend. I think overall, we'll probably see a lot more stock market investing conversations become centralized onto platforms like Stocktwits, Twitter, Reddit, for example, and not just beyond WhatsApp and Telegram. And so I think, yeah, I mean, that's basically the reason. I think super pumped about it. It's my passion and my day job in one, which is a bit dangerous, by the way, to be honest. But yeah, but all good so far.
So as I sort of understand, Stocktwits India is basically all systems go at the moment, and it's pretty heavy on your radar. But what was the reason for launching Stocktwits in India? So what's the plan, or what's the process? What's the reasoning? Just talk me through it.
So I'm the head of international. I guess India is going to be the main market where we, have a significant presence outside the US for now. So that's our plan for this year. India, has been my main focus for the past few months. We have kind of started, but we're still in the brand awareness, brand building phase. We've recently opened up the Nifty 100 Indian tickers onto Stocktwits. So we are seeing engagement and we are seeing active community building happening right now, which is awesome and super fun to see. I'm super convinced there is very strong product market fit here, and there's almost zero, if not zero competition whatsoever, right? The way we organize conversations via ticker just makes discoverability a lot simpler and a lot easier, right? So you're not kind of confined by the people you follow right now, which is really fun. Yeah. And so I think, India is super exciting. I think we all know that India is in very early days of, equity, or of equity participation. I actually tweeted out recently, I think in Paytm's IPO prospectus, I think they actually mentioned it was 4% of India has equity exposure, which is insane if you think about it, right? So we're in early days, but it's a super large audience. I think we're about to hit an inflection point in India as well, as far as equity adoption and kind of equity ownership. So fun times.
So yeah, I'd love for you to continue on that topic of India. Maybe just why India, especially in terms of Stocktwits there. Just the why behind it.
Yeah. So in India, I think what's really cool about India is that you're seeing a large population of people who are who are super interested in investing, right? I think you've seen the trend in brokerage accounts opened up in the past few years be phenomenal. I think you've seen I think you're going to see now the Alibaba moment of Indian equities with Zomato coming up pretty soon, and then also Paytm coming up later this year. I think those two moments are going to be watershed moments for the Indian equity markets, where you're going to see stocks of cool tech companies that people use and love on a daily basis actually become public, right? And so until now, you've seen the Indian indices be comprised of 1/3 of banks for the most part, and then after that, I think IT is number 2, number 3, right? So, and of that, IT is primarily the Indian outsourcers like IT Infosys, and so also I think those trends are super bullish for India. I think you'll see a even more equity adoption amongst the millennial Gen Z audience than you're seeing today. And then also what I see is that just from speaking in colleges and like being involved with investment clubs and outreach with other young like-minded people, is that the knowledge of the young investor in India is phenomenal, especially in more technical analysis and more trading. So I think I spoke to a college this past weekend, and the level of depth and sophistication they have on technical analysis and on trading chart patterns is phenomenal. Way above anyone I know at that age when I was growing up in the US. So it's super exciting times. I think there is a massive interest to learn about investing in India these days.
To talk more about the Indian market in general and Indian equities, what trends or themes are you excited about in India specifically?
I guess there's a few takeaways I have with the Indian market, right? So, one, India is a secular growth market, right? So even though the key indices may include banks and have a lot of cement and paint and infrastructure and then also infrastructure companies, people have to realize that these are all secular growth trends where insurance and banking and infrastructure are all in early stages of penetration and adoption, right? One. And then two, I think that India is about to go on a Alibaba style moment, right? So I think there's a Paytm IPO coming up pretty soon, which is going to be India's largest IPO. The founder is a person who's probably India's first truly self-made entrepreneur who's built a massive business from scratch himself, right? And I think that's going to be the first company that goes public that is a product that people know and love and use across the country. And that same thing happened with Alibaba in China. And I think that's going to drive a wave of retail equity adoption for people who realize, this is the first brand that I truly kind of aspire to and I kind of look up to, and I use the product every day. And it's a company that I can kind of have some connection to personally. I think that's going to unlock. I think that plus the next wave of consumer tech IPOs is going to be a big thing for Indian retail investing.
Yeah, so you mentioned Paytm, but in general, just what's going on in India? Like, it seems like they're just pumping out unicorns like there's no tomorrow. Do you think it's a case of TAM or what's going on there? What are they doing differently? Is it the rise of the middle class? How do you see it? And maybe some of the reasoning or explanation behind it, do you think?
I think people are missing it. I think people are all over it. I think if you look at the global US VC funds and how from Tiger Global to Coatue to the rest, right? And what they're doing in India, I think it's they're placing serious bets. And like you said, it's all TAM and consumer spending and the rise of the middle class and digital adoption and smartphones and things like that. I think also, right, it's not just the VC ecosystem, it's also around like mini secular trends, right? So if you, like one example can be like the trend of, jewelry stores going from mom and pop local store being centralized and having franchises. It can be things like women who used to live in, tier 5, tier 4, tier 3 cities move to tier 2, tier 1 cities, and therefore they maybe start working. So their dress changes from classic Indian attire to Western attire, right? So the number of secular trends in India outside of the standard VC ecosystem are just massive, right? Now, I think the risk in India is going to be the macro and, the COVID impact, which has been quite devastating, right? I think the issue in India you're going to see is that, right, I think the large cities, are kind of well covered and, or have, you've seen some strong recovery there, but the rural economy and the rural areas, I think, we don't even know what the impact would be there yet at this point.
So how do you view India when compared with overseas markets? Maybe could you highlight some of the strengths versus the US, do you think? Or what are your thoughts around that?
So I think India is in more early days, right? So when it comes to consumer, right, I think, the benefit is that you've seen a lot of domestic brands being built in consumer internet world who from the rise of the smartphone to then they've kind of being Indian and being local, they've been able to make that shift from tier 1 cities to tier 2, tier 3 cities, and the regionalization, customization in regional languages that US companies like a Twitter and Snapchat, for example, have not done well, right? It is very difficult for them to localize at that scale in their India operations to that tier 2, tier 3 city. And I think the local guys have done really well. I think that's the first observation, right? Yeah, so that was the first one. I think the second thing you're going to see in India, I guess the first was consumer tech. The second is going to be in the software B2B world, right? I think there you're seeing two waves of companies kind of go public and kind of actually not go public yet, but scale and attract venture capital dollars. One is India for the US, and that's where you kind of leverage India's strong engineering developer talent who ordinarily, have worked at large outsourced kind of application development shops like TCS and Infosys and kind of help build US brands. But I think the trend of those developers, building India, but then supporting Indian SaaS products that have a market overseas is a huge trend. So I think what fixes a company that invested in, I was at Cisco, who's now just raised a massive D round from SoftBank, right? And so what they do really well is that they're the first company, to really scale that I've seen personally, could be wrong, but the first company that I've seen personally who has built a international or a US focused go to market motion predominantly in India. Prior, it's been companies like Freshdesk and Freshworks, who've done it for SMB and can use inside sales and kind of calling and, where the sales cycle is less complex. But Whatfix has been able to do this at scale at a lower price point in the US, which is super, super tough to do, right? That's one thing. And the second thing is that you're seeing a second wave of software startups, sell to the rest of the world. So I guess, you've seen software startups built in India who sell to Middle East and Africa, to Southeast Asia and India as well. And I think that's a trend too that people don't realize, that you're going to see the digitization of SMBs and things like that also in other parts of the emerging world.
Do you have any maybe advice or things to look out for someone thinking of investing in India? Like what that should they be aware of, or what should they know going in, do you think?
I'd say overall, you'd want to kind of focus on the best, right? And I think what's going to happen is that, what you've seen in the rest of Southeast Asia and even China, right, is that, the best platforms who have critical mass and engagement and user metrics are likely the more likely ones to be able to add different products on and retain their existing market share. I think for consumer tech, that's going to be the holy grail area, right? And I think second, what I would avoid is investing in areas you're not as comfortable with. Maybe the number 2, number 3 players in the space, because they may have on paper attractive valuations, but maybe their CAC is really high, right? I think India has a problem of monetization because you have very small ticket sizes and the marketing spend can be quite high, right? So understanding CAC trends is something that is quite critical, right? So I'd say that's what I would really focus on. That's what matters the most. And the safe kind of one way to de-risk yourself from that is just to focus on the best.
To move into my final round of questions, more generally this time as well, what's been your most undervalued life experience, do you think?
I guess for me, the main life experience has been, right, is to put yourself in situations that are, quite different and unique and kind of out of your comfort zone. And I think that's I've been fortunate to kind of have the most success in is, when I've kind of taken those calculated risks. The first one being going to INSEAD, right? At INSEAD, it's I think people don't ordinarily speak very highly of the MBA experiences because, it is kind of not that helpful from an educational perspective. It's helpful for your career, but not actually very practical. But I think I think INSEAD for me was an opportunity to meet people who are completely different from all over the world, who are not just in my social bubble that I had boxed myself into for the previous 6 years of my life. And I think that really opened my brain, kind of made me be more aware and cognizant of other ways and kind of ways to be happy in life.
Has there been any books or maybe large influences that have shaped your worldview, whether investing or career or more generally?
So probably not books, unfortunately, I'm actually not a huge reader per se. I guess I read a lot of Substacks and blogs. I try and follow really smart people and really good podcasts. I actually love this podcast so far as well. So there's a Stocktwits podcast called Panic with Friends, where Howard Lindzen kind of interviews other, entrepreneurs and CEOs and public equity investors and just kind of learn from their experiences and, understand frameworks of how they kind of think about investing in the trends we're in. And then I guess what I'm looking for next, right, is how people are going to evolve from, the first step being from where SaaS and fintech and e-commerce have kind of ruled the world to the next phase of AR, VR and crypto and gaming. And the third step is going to be, once rates do normalize and, this, world we're in of excess liquidity does kind of change because it won't last forever, what that new paradigm looks like. And I have no clue what that is, but my goal is to kind of follow along the smartest and best brains out there to kind of figure out how they navigate it.
So if you were 18 today, where would you be spending your time? Like, what would you be working on, do you think? Or how would you be going about it, do you reckon?
So if I was 18, right, so I got this one kind of advice that is super controversial, but I think it's kind of smart, right? When I was in college, so there was this one career consultant who was trying to pitch their service, and they were like a coaching, this career coaching for students firm, right? Who came and said, look, like, we'll help you get into Goldman Sachs and McKinsey. You tell us what you want. We'll interview prep and do CV prep and kind of get you in. And the reason we think this is a good thing for you in your life is that you should follow the best people who are, in this generation, the class ahead of you, maybe the most successful people, in politics or in, venture or hedge funds, whatever, private equity at that time, right? All follow the same path. You should follow that path. And I think that is something that has always stuck with me, right? And I think like, I don't always agree with it, but I do think like if I was 18, I would be asking the 19-year-olds what they're doing. I would be asking the college kids who are in the 20s what they're doing. I'd ask the young professionals who are in the mid 20s what they're doing, what they're seeing, and kind of use that kind of insights to kind of craft back what suits me and my personality and my skill set.
Yeah, I think that's a perfect way to wrap up. So Shiv, thank you so much for your time and patience over these 2 recordings. So listeners obviously will get this as one edited, perfect episode. But I just really appreciate all this, and it's been a pleasure, mate. So thank you so much.
Cool. I appreciate it, man. Thanks for having me on your show, Kalani.
If you enjoyed this podcast episode, be sure to check out the website compoundingpodcast.com. On the website, you'll find every episode complete with transcripts, show notes, and other related resources. Either way, links to all content mentioned will be in the description below. Also be sure to sign up for my weekly newsletter, curated by Kalani, where I share what I've been reading, learning, and watching for that week. Same as the podcast, it's compressed to impress, and I aim for maximal return on your time invested. Sign up at kalanis.substack.com. So that's KALANIS.substack.com. You can also connect with me on Twitter at ScarrettKalani. But until next time, have a good one.